Credit Suisse economist Thomas Herrmann joins us now from Zurich to answer some of these questions. Good morning to you. Let me just begin with comments we've been hearing from German Chancellor Angela Merkel. She's saying that an emergency aid package for Greece is not necessarily a done deal. I mean, just how much concern, how much nervousness is this generating in global markets right now?
Well, the concerns are very large. We saw that in market action yesterday. I think we have to distinguish two things here. One is the immediate liquidity needs that Greece has. For example, the roughly 8 billion euros that need to be rolled over in mid-May. And the other is a solvency question. The market's concern at the moment pretty much focuses on the liquidity needs because what we're hearing out of Germany suggests that the payments that Greece has now asked for formally might be delayed and that these liquidity needs might not be met with these emergency loans. We're pretty confident that despite all the talk out of Germany and in Europe in general, these loans will be made available. If necessary, this will be made via the IMF. So the liquidity concerns should ease somewhat. And then, of course, solvency, so whether Greece will be, in the medium run, be able to pay back its debt will come more into the focus again.
Well, exactly, because will the emergency aid make it any easier for Greece to refinance at a lower rate, perhaps further down the line?
Well, I mean, it would make things easier because it would buy Greece some time, some breathing space to really push through the announcements that have already been made. Probably the conditionality of these loans would be even higher. That's at least what the comments out of Germany suggests. Helped by the IMF, we could then maybe see some numbers coming out of Greece. It is a very big task. Already the announcements that have been made even before the renewed downward revision of 2009's deficit are very large and could be sufficient to reduce not only the deficit but also to bring the debt on a more sustainable path again. But Greece needs time to prove markets that it can do this. And well, the time would be there if the money would flow.
And worryingly, we've seen recently the yield on two-year Greek government bonds rising as well. Tell me, how do you assess the risk for contagion right now? Are there signs, would you say, that the Greek crisis is spreading to other bond markets such as Portugal, Ireland, Spain?
Well, the signs are very clear. I mean, yesterday we had another high in spreads of Portuguese bonds in the 10-year sector, for example, about 200 basis points versus Germany. So the signs are there, and that probably also brings us to the whole issue of restructuring. That's also something the markets are very concerned about at the moment. Probably, you know, it's playing with fire a little bit. If the deal would include a restructuring at the moment, and we think there's a good chance that restructuring will be pushed out, at least there still is a possibility that this could happen later, but not at this point, because of the risk of contagion, because of the risk that the Eurozone bonus, if you want, that many of the peripheral regions have enjoyed for many years, meaning that the spreads before the crisis have been almost zero versus Germany. That shouldn't be given up as easily, and therefore
well,
restructuring
thank you so much indeed for your insight on this story. I do appreciate Thomas Herrmann. Thank you very much.